What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol STNE for StoneCo Ltd. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know they gave us an earnings announcement after the bell here, so let's flip on the extended hour session and see what's going on with the number. And my goodness, fairly nasty. I mean, without even zooming in, I'm sure you could have seen that red from a mile away. It's very, very likely that we will open on a gap down for tomorrow's session. Remember, a lot can happen between now and 9:30 when the bell actually rings, but what we're about to discuss is a framework to help us navigate the open. So we want to know where the overnight low is, we want to know where the anticipated open is, and we also, while we're here, want to know where today's low is, because basically what we're looking at is a gap fill framework. So let's take a closer look at this through the lens of the daily, of course, so making this adjusted so it's a little bit easier on the eyes, doing something like that. There we go, much better. The first thing we always think about in any given gap scenario is the gap and trap. So it could be a gap up, could be a gap down. What we want to watch for is if we open here, fail to take out the overnight low and trade back higher through the open, that triggers a long trade to fill the gap up towards 31.15. Now, based on the severity of the gap, it might be a half gap. So in that instance, about 30 is the number to be watching for. Let's, of course, take out the fibs and find out what that official number would be. And yeah, would you look at that? 29.99. So my eyeballs are very well calibrated to finding about 50% of the range, apparently. So 30 should also be on your radar, and that is how the gap and trap trade should essentially unfold. Now, the second side of the same coin is the gap and go, right? So this is scenario number 2 here, where if we open here, put in some sort of bearish consolidation, never reattempt that opening print here, then look for a flush of these lows to take us lower into the next obvious daily support. Now, what do we have for support underneath? Well, I hope you can kind of answer this. There's nothing, right? If I scrunch up the chart, we basically have had nothing in a very long time. So we really need to go fishing here for a target. If we zoom in on this section of the chart, hopefully you can pick out something that makes sense. So this, as strikes me as the top of the range, that's semi-important. Then this would be the next structural element underneath. What you'll notice, a couple of fake breakdowns from in here, but as we know, and basically where I just drew those lines through, if I come back on over to reality and zoom in on this section of the chart and then readjust so it's nice and pretty for your eyeballs, here you go. Are you really going to short something for this tiny little range right here? No. And can you even short this in the first place would be the next question, right? And very surprisingly, it is easy to borrow. So a pleasant surprise here inside of Thinkorswim, you can short the shares fairly easily, but I would not go with options, right? If you look at the options chain here, not really attractive, only 1,700 contracts at the money strike, and you're looking at about a 10-cent spread on something that's 50 cents. So you don't want to be taking, like, I don't know, my math, let's see, mental math here, 20% haircut, just, marketing in and out of the position, 1/5, right? So all things considered, probably not going to want to play it with puts, maybe with short shares, considering it's easy to borrow here inside of Thinkorswim. And instead, right, what I might, be more apt to look for is not the flush all the way to 21, right? But basically, if we start breaking down underneath this zone of support, that opens up the door for lower. In that case, I would just be monitoring for continuation and just trailing your stop lower as the price potentially moves lower. I'm not saying it has to flush all the way to 21.10. That's just the next structural element, which we pointed out from the daily perspective. Really, that's going to wrap up the video, and it's all going to come down to, do we get the gap and trap? So scenario number 1, this one that looks like this, for the long back higher, number 1 and 2 as targets, or do we get the gap and go? So something that's here, lower consolidation, breakdown underneath this 27.71 really takes us lower back into that range. Again, monitoring for continuation there, not expecting an all-out collapse into that 21 target underneath. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.